At 10 a.m. here in Lagos, Nigeria, and it's time for Business Morning on Channels Television. I'm Ladi Williams. Thank you for joining us.
Good morning and welcome. I'm Ini John Mekwa. Well, just before we delve into the discussions for the day, let's see what news is making the rounds. Starting at the global oil market, crude prices extended their losses into a sixth day today, hovering for near a three-month low, hurt by growing fears over slower fuel demand amid the spike in COVID-19 cases worldwide, while an unexpected rise in the United States gasoline inventories added to pressure. Brent crude was down 85 cents to $67.38 a barrel, while U.S. West Intermediate crude lost 93 cents to $64.53 a barrel after tumbling 1.7% in the previous session. Both benchmarks have lost more than 5% over the past 6 sessions, trading near the lowest level since May the 24th. Slower growth in China as it imposes further restrictions is response to rising COVID-19 cases, and some weaknesses in a few U.S. data points this past week has been driven the softness in oil prices. The surprise build in U.S. gasoline inventories also fueled concerns over growing demand.
And back here, the President, Muhammadu Buhari, has approved the steering committee led by the Minister of State and Petroleum Resources, Timipe Silva, to oversee the process to kickstart the implementation of the newly signed Petroleum Industry Act. The primary responsibility of the steering committee shall be to guide the effective and timely implementation of the PIA in the course of transition to the petroleum industry envisaged in the reform program, and ensure that the new institutions created have the full capability to deliver on their mandates under the new legislation. It also added that the committee has 12 months duration for the assignment, and periodic updates will be given to Mr. President.
Still in Nigeria, clients of North Akafo, an insurance company, are bound to reap benefits for a third consecutive year for an accident-free period of their premium payment. Since its inception in 2017, North Akafo has paid a total of 1 billion naira in claims.
We are conservative.
Insurance in Nigeria is on the verge of employing legal, unconventional schemes to ensure the security of finances and resources of the insured. To this effect, North Akafo is centered on providing value-added solutions on insurance services that guarantee payments on all contributions.
Takaful insurance is part of the growth trajectory of Islamic finance that was influenced by the introduction of Islamic banks and Islamic capital market entities. Its introduction is a testimony to the responsiveness of NICOM, the insurance regulator of Nigeria.
The chairman shares insights on the North Takaful surplus distribution.
The principle is that in the Takaful model, the policy holders, right, when they pay the premium belongs to them, not the insurance company. The insurance company just manages the funds on behalf of the policyholders, for which the insurance company gets management fees.
A total amount of surplus to be distributed to participants is 36,300,000 naira, with NG Petroleum receiving the highest check, followed by Kano, a Greek supply, Jais Bank, Sterling Bank, Madibo Adama University of Technology Yola, and JAM.
We took their policy, and I will say in the last 2 years we have enjoyed it to the extent that most of our claims have been paid.
Takafu is an Arabic word connoting shared responsibility or mutual sharing. For many, it is expected that this scheme will be employed by conventional insurance companies to enable citizens maximize profit in the local economy, as schemes like this are not secluded to Muslims.
And now to our first conversation. The CBN has reportedly secured an order to freeze bank accounts of 6 online investment platforms for 180 days or 6 months. The CBN is alleging that they are engaged in illegal foreign exchange transactions, accessing and procuring of foreign exchange via their banks from the Nigerian foreign exchange market via the several BDC operators. international money transfer operators and have transferred cash deposit of more than $10,000 to various accounts overseas, contrary to provisions of the extent of laws and regulations, and also traded in foreign securities and cryptocurrencies in contravention to the CBN. Channels Television has reached out to the regulator for a reaction, but is yet to get a response on the matter. Meanwhile, two of the affected fintech companies, Bamboo and RiseVest, have reacted to the freeze order. According to them, their team and government team is looking into the matter. They also assure that investments and operations are safe. Well, we have Maiwa Ojaye, Head of Communications, RiseVest, one of the affected fintechs, joining us now. Great to have you on the program. Good morning.
Good morning. It's a pleasure to be here.
All right, so the CBN says it needs 180 days for investigation. What happens to investor funds during this period?
So nothing really happens to their funds because our investors are really affected by this. So yes, we enable dollar investments, but at the end of the day, people fund in Naira and we pay returns in Naira. So investors can continue to invest as usual. They'll continue to have access to their funds. So funding and withdrawal goes on as usual while the courts is looking into this.
So during this 180 days, during this investigation, has the CBN reached out to you? You know, what is your activity or your conversation along this line of the allegations that are leveled against you?
Well, so first of all, I think we should make it clear that the CBN has a right to regulate FX policies, and we respect that. On our part, we have always and will continue to engage regulators to make sure that all the issues that are raised are properly and swiftly resolved so that we can continue to do our work in a safe, compliant, and beneficial way.
What impact is this likely to have on other fintech startups as well as the financial system?
Well, so what is currently happening is you can call it like the birthing pangs of innovation. So this is to be expected. The fintech is still relatively new, so there needs to be a lot of understanding about what kind of business models that fintech companies operate for the regulators. So this is to be expected, but I'm pretty sure that as we continue to engage, we'll always find a middle ground so that we can operate rightly.
All right, so yeah, so there are also talks that a lot of startups and fintech are not contributing to the economy. Like, yes, Nigerians invest, but they are not giving back. We don't see them in tax. We don't see them, you know, at the stock exchange. You know, we're not feeling their impact. So what would be your reaction as a startup? What would be your reaction to this?
Well, to answer this, I need to say that Rise's mission is essentially to connect Nigerians to the best investments so that they can grow financially and in turn support the growth of the Nigerian economy. There's a lot of growth happening internationally, and we want to tap into that growth, but bring that money back home. So what we do is essentially give the everyday Nigerian access to those opportunities so that they can then bring the money back home to grow the economy. So we do contribute to the economy. We create jobs. As for Rise, we're currently working on a platform that is supposed to showcase Nigerian businesses and package them so that they can attract foreign investment. A lot of fintech companies also attract foreign investors into the country, putting Nigeria on the map. So we do contribute our quota to the Nigerian economy.
All right, what kind of regulation or policies would you like to see, or would you prefer that the CBN put in place to avoid a repeat of this in the future?
So there's currently a lot of talks going on between not just fintechs, but startups in general and regulations. I can't really speak to that here, but a lot of fintechs are working on licenses to make sure that they operate legally, and we're sure that the regulators have our best interests at heart, and we're sure that at the end of the day, we'll be able to have licenses or regulations that allow us to operate freely.
All right, so the federal government has for a while now been talking about ease of doing business. When you look at the Nigerian environment, as objective as you can, I must add that, how easy is it to operate a business in Nigeria?
Well, there's certainly room for improvement, but I think that we can say that it's improving daily, and I think that our rankings are improving daily as well. We're not quite where we should be, but we are on the up and up. So in the nearest future, I'm sure that we'll be right there, maybe top 5, top 10 rank of global ease of doing business.
But what would you like to see? You know, what would you like the government, what steps do you think the government can take to actually make it easier, especially, you know, for the young people who are very active in ICT these days? They have a lot of, you know, very creative ideas. You know, what do you think can be put in place to help them actualize these ideas and mop up unemployment in the country?
So I think the answer is not exactly what they need to put in place, but what I think the first step should be, and I think that's already happening. At the earliest stages of innovation, there needs to be a lot of conversation happening between the government, the regulators, and the players in the innovation sector. We need more of that, because I think that most of these regulations come as a result of not really understanding the opportunities that abound in technology and how we can impact just everyday people, how we can level the playing field, and, you know, democratize access to wealth. So I do think that there needs to be, first of all, productive conversations happening so that everyone who is involved, every stakeholder, can then state what the next best course of actions should be. So I would say we need to start having conversations, governments, regulators, and innovative players first.
Well, who do you think should be initiating these conversations at this point?
I'm not sure that there is one person. So first, for us, when things like this happen, we try to make ourselves available to either the SEC or the CBN or whoever we need to be speaking to. But since we operate in this country, and I feel like the government should, when they extend a hand, or they should extend a hand and bring the startups in, so that they can really, really understand what exactly is going on and what are the opportunities for growth and how this space can evolve quickly.
So do you have like an association, you know, like a platform where you reach out to the government or you air your view, apart from, you know, like we reached out to you individually? Do you have an association of startups, fintechs, that you can easily, you know, have a stronger voice?
I can't answer that because I'm not really sure. So I don't want to say something that isn't true.
All right, what's your outlook for the fintech industry going forward in Nigeria?
It's great, you know. I think that the sky is just a starting point for us. There are companies every day that cater to every facet of the typical Nigerian. We have platforms for saving, you know, we have new banks coming up as well. So just meeting Nigerians where they are. People helping you send money without having a bank account or without using an account number. So we have the talent, we have the ideas, and we have the markets. So I think that in the next 5-10 years, what fintech looks like in the next 5-10 years would be greatly different from what it currently looks like now.
Okay, we do hope it's a better look than this one. But, you know...
It will be. I think it will be.
Okay, I believe so too. I honestly do. So, you know, at times like this, we have seen some not so transparent and honest people taking advantage of the environment, especially since it's a growing one. And so we've heard of people being duped, investments, going the wrong way, which is one of the reasons why the CBN seems to be giving, this kind of action, taking this kind of action and giving this kind of attention. So what would be your word to Nigerians who would see, oh, there's a lot of fintech activity going on, they try to attract you and say, oh, you can invest in this and get this. What would be your advice to some potential investors? What should they look out for so they don't fall into the wrong hand?
So my first advice would be that wealth is built slowly. So the reason why people fall victims to things like this is, they want to cash out really quickly. But one of the things that RISE does is, part of our mission is also to educate people about how what the right way to build wealth is. So for example, we have a thriving community of over 12,000 Nigerians where we teach financial literacy and we coach people on increasing their income. Once a month, we have a club meeting where we bring people who are financial experts or who are established in the field to come talk to people. For this month, we're currently going to speak to someone who has authored a book on financial freedom. So that there's a knowledge gap. A lot of people do not really understand what a good investment is. They want to get a ridiculous amount of ROI or a returns on their investment in 3 months, and that's not how it's done. Which is why earlier on I said we respect the fact that the CBN and the SEC are regulating this space because yes, there are people who have taken advantage of Nigerians. But for fintechs, for RISE especially, we are regulated and we have ensured not to contravene any laws. And users or clients on RISE can rest assured that all their funds are safe and secure.
All right, well, that's good to know. That's good to know, but we do hope that this is sorted out in a jiffy, for future references. Well, thank you so much, Mayowa Wojaye, Head of Communication at RISE Vest, for spending some time with us this morning.
It's a pleasure. Thank you.
Yeah. So we'll take a break now. When we come back, we'll continue the conversation on another issue on Business Morning here on Channels Television. Do stay with us. You're welcome back. So it's now Petroleum Industry Act, no longer a bill, and the President has approved a steering committee with a target for implementation in 12 months. That's about this time next year. What preparations should be geared towards this? That's one of the issues we'll be discussing with Dumebi Yeke on Commodities Market Update. Hello, Dumebi. Good to have you again.
Good morning. Good morning. Thank you for having me.
Yeah, so it's now an act.
Yes.
And the president says in 12 months with the committee, there should be there should be implementation like in 12 months. What preparations should we be having at this time?
I mean, first, there's already a committee set up in place, so that's the first step. That's the first step in the right direction to ensure that implementation is, fast moving. At the end of at the end of the day, there's the important factor of ensuring that once there's an act or once there's a bill, all the contents of that bill must be fully implemented to ensure that the economy is feeling the impact of everything that has been, written down on paper. So that's exactly what I think the preparations should be. So whatever sensitization, whatever information, whatever committee that should be set up, whatever percentage should be given, whatever things that should be put in place should be put in place, and let the economy start feeling the impact of what the act should be doing in the economy, which is deregulate the downstream sector, encourage new investments in the petroleum industry as well.
We have the subsidy
exactly.
issue at this point. So it's almost like choosing between the devil and the deep blue sea because it is a struggle.
Yes, it is. Definitely that's having an impact on revenue that could have been used for other, things in the economy. And that's, I wouldn't say it's trapped, but, it's it's a dilemma, so to say, removing subsidy and then seeing the full impact of no subsidy in the economy, how that's going to affect the average Nigerian, and then paying subsidy and we're losing something there. So there's an opportunity cost, that is happening in the economy, especially with the NNPC in that regard. But with NNPC, with the subsidy being retained, we're still going to have petrol price at 160 to 165 naira per litre, which is good news to the average Nigerian, because at least for the next 6 months, there is no additional cost to the average Nigerian. But in the end, we still, it's something that is eventually going to still happen. It's just like delaying the inevitable at this point.
So where do you see the price going with the removal of subsidy eventually?
I mean, with from our calculations, we're looking at a petrol price of at least 200, and then it could increase again to about 300 to 380.
Well, it should be affected by the price in the global space.
Of course. So the thing is, once we deregulate the downstream petroleum sector, the expectation is that the price of PMS will be cost reflective. So if the price of oil is going down in the global market, we should see that have an impact in the domestic price of PMS. If the prices are going up, we should also see that. And so there's like a chain reaction, or should I say like a value-added thing going on, just like the way you have in agricultural commodities. Once, you get your yam, but once it becomes fried, or it becomes processed, there's an additional cost. Exactly. So that's the same thing that would happen with the price of with the global price of oil then trickling down to the retail price of PMS. So
what impacts do we expect? I mean, Port Harcourt, the refineries are under rehabilitation now.
Yes,
and we hope to see them producing in a short while.
Yes.
Dangote is also, in focus. What impact do we expect these to have after the subsidy?
Okay, so what's happening now is that we have the NNPC that imports, refined petroleum products, and then there's the marketers margin, all of that goes into the prices now with subsidy and all, and then that we are able to get it from the pumps, from various outlets. So with the refineries, once they kickstart, once we're able to see their impact, once there's production, all that chain reaction is almost invisible. It no longer exists anymore. So we can get PMS or another petroleum-related product directly from the Dangote refinery, from the Port Harcourt refinery. So it's just moving from the production point to the consumer. So there is no effect of the exchange rate. There is no effect of yes, there will be the effect of the global price of oil, but at the same time, Nigeria produces oil. So they're most likely, which is going to be the case, they would be getting the raw material from here.
Nigeria.
So it just goes from the ground to the refineries that are within the country to
so the price should be local, but we're also still, these are business people.
Of course,
they,
so they have
also want to export.
Of course,
and they also be looking at what's happening in the global space.
Yes, yes. So there's going to be. So it's just like saying a manufacturer that is situated here in Nigeria. If they are producing, let's just say, for example, producing bread or producing wheat. Let's use wheat for example, and they are able to use the wheat from Nigeria here to produce wheat and then supply to domestic retailers and all, and then consumer suppose is going to get the cost of doing that within the country will be affected in the price, but the effect of importing, exchange rates is not going to be affected in that price. So at this point in time, if all ceteris paribus, if everything works the way it's supposed to, we're not going to be having the additional effect or impact of the exchange rate on domestic prices.
With that example, sometimes you see some things, for instance, rice.
Yes.
You see the imported one, cheaper than, and they tell you overhead costs.
Yes,
you understand?
So that's what I'm saying, ceteris paribus. If everything would work the way it's supposed to, because by default, the cost of producing something here should not be as high as if you're
bringing it into the country.
Exactly. Right. So if everything is going to work the way it's supposed to, there are no there's no impact of, the vandalization or this or that, or insecurity or theft, or if everything works the way it's supposed to, if all policies and regulations are effectively implemented, implemented, and all of this, whatever bottlenecks, structural bottlenecks that would, normally manufacturers would put in their prices or effect in their prices are taking out, we should, be enjoying that...
And we still have the issue of smuggling of PMS. So how is that going to, how will it impact that issue?
Yeah, so like I said, if all bottlenecks are effectively addressed,
right.
you know, we won't even be having this conversation on whether there's smuggling or...
So that would be discouraged at some
Exactly,
point.
that would be discouraged. So, and now, we're not looking at a government-owned enterprise right now.
Mm-hmm.
We're looking at private-owned enterprise.
Right.
So Dangote will... he will definitely find a way to curtail smuggling of his product because this is my money. Nobody's going to take my money anyway.
Right.
Do you understand? So there would be that, you know, there would be that clamp down on such activities. Why? Because no businessman, no rational businessman will want his money elsewhere. And even if it's, if you notice, if there's even local businessmen do this. Once they notice some form of arbitrage or smuggling or whatever, they find innovative ways to shelve that and then make money from that.
Right.
So definitely, we would see more efficiency in terms of in the petroleum industry.
Seems like
so
the
that's
private
why
sector manages businesses better.
Exactly. So with everything that's happening now with the Act and all, what we're going to see is improved corporate governance. We're going to see improved efficiency, improved regulation in the petroleum industry, particularly in the downstream sector.
Okay, so we have the NNPC is supposed to be commercialized with the PIA now.
Yes, yes.
What does that mean?
So simply, but there are two parts to this. So the first part is that the NNPC will still remain in existence, you know, in the time being, and that's because of subsidy payments. So we're looking at a period of 6 months. So the NNPC would still be in existence in that time. So, but with the implementation of the PIA and all, what we're likely to see, as Timper Silva said, what we're going to see is that there would be, you know, a new company under the Karma Act, so that which would be NNPC Limited. And what's going to happen is that we're going to have like a separate body to ensure that we're separating regulation from commercial activity, meaning that profit has to be made because they are going to be making their own money and they have to, you know,
pay their salaries,
do everything by themselves. Exactly. So there is no impute or there is no government stuff happening right now. So this is a proper business.
Right. Okay.
You know, to regulate the petroleum industry to ensure that what's supposed to happen is happening. I produce, I sell, I make my profits. I pay my taxes, I pay my salaries by myself. So that's exactly what we're going to see. So like I said earlier on, so there's going to be improved corporate governance, efficiency, you know, transparency. People are going to know what is happening. People can, you know, if it's, price of petrol might go up, or everybody's going to, you know, sit up. Okay, let's see how to. So basically, we're just going to see a transparent, you know, industry, a more efficient industry.
All right, interesting. What's happening in the domestic commodities market?
Oh, mixed movement across prices. We're still, you know, talking about inflation. You know how all of that is going to play out in the next, you know, few months. The impact of the harvest season. The inflation numbers came out. It declined again as expected, based off of expectation of the harvest. The impact of the harvest season declined to 17.3. But a significant thing that we saw is that core inflation has increased. Oh, yes. You know, so meaning that other factors are still very, very potent and it's affecting inflation. So even if we're seeing inflation go down now, it could still pick up again based off of all of these other factors that are coming into play and affecting commodity prices.
All right. Well, thank you so much, maybe, for joining us again the second time this week.
Thank you.
It's always a pleasure having you.
Thank you so much.
All right. We'll just take a break now, and then we'll be back with another conversation. Do stay with us.
Now this is more like it, right? We want the best quality ingredients when we cook. When it comes to salt, we care less. We say salt is salt. Well, I care about my salt. It goes into my food and my body. And that's why I use Dangote salt. It's time to care about your salt.
You're welcome back. Recently, there was a headline on the total loan facilities the current administration has been able to access from the Central Bank of Nigeria. According to the news, the ways and means from the CBN to the federal government ballooned to 15.5 trillion naira, indicating that around 14.86 trillion naira was received by this present administration. Well, a look at the federal government's borrowing indicates more than 2,000% borrowings between 2015 and now. A lot has been said about the country's debt stock. More will be said this morning as we have Akintoye Oyelakun, investment analyst with Quadros Asset Management, joining us. Good to have you, Akintoye.
Thanks for having me. It's my pleasure.
Yeah. So recently, the Minister of Finance hinted that Nigeria would continue to borrow as long as revenue continues to underperform. What's your thoughts on this?
Yeah, so on that, there's no issue about borrowing. Most economies of the world, even the developed economy, do a lot of borrowings. However, the problem about borrowing is when you are not able to, pay back, when you're not able to service your cost, it has negative impact on the economy. Also, when you are borrowing for recurrent expenditure, rather than using the fund obtained for capital building, for strengthening the economy and supporting stronger growth in terms of economic performance, this is where the issue lies. So, Nigeria will continue to borrow, that's fine. However, we just only need to ensure that everything that was borrowed is effectively used and, used to drive the necessary infrastructure that we need to build within the country. So that's basically my opinion on that.
Right, so we keep talking about debt to revenue as a source of concern. Do you see any intentional effort to resolve this?
Well, as things stand, Nigeria's debt service to revenue has been very much high. Looking at the first 5-month data, Nigeria's debt service to revenue was around 98%, which is very much of a big concern. And what we have noticed now is that as against what we saw earlier in the year when yields are rising, we saw yields on fixed income instruments rising, across the short and long tenor and even the mid tenor. We are starting to see a reversal in that. At the last 4 or 5 auctions that have been concluded by both the CBN and the Debt Management Office, we are seeing a sustained decline in the stop rate, which kind of indicates the pattern that the DMO and the CBN wants to do now, in an attempt to reduce borrowing costs for the government finances. So we are seeing yields going lower, and we are likely going to continue to see that. However, that may not be sufficient, to bring down the cost of borrowing significantly lower from the levels which they are. So we need to have a lot of policies to drive investment within the country. Also, policies that is going to drive improvement in revenue generating capacity, which should then support our ability to optimize borrowing for the country development.
Well, yesterday, the DMO completed the auction of 150 billion naira bonds instruments across 2028, 2036, and 2050 maturities. Looking at the outcome of that auction, what should investors anticipate for the remaining part of the year?
Yeah, so what we saw in the last auction, which was completed yesterday, it has been the similar trend that we have seen in the fixed income market auctions generally. We have seen sustained decline in terms of stop rate, which is the yield that is attached to those maturities. We have seen attempt to reduce that. In the previous auction before the last one, we saw that the DMO was not willing to overload on some maturities, given the fact that investors were bidding high, at a high yield. In an attempt to cut down the cost of finances, we saw that the stop rate was reduced, and then the DMO did not mind not fully allotting all the bids that were made in that auction, and that was what we saw yesterday. So yesterday we saw investors bidding lower compared to the previous auction, given the pattern that has been observed in the market. And as a result of that, we saw that the stop rate, which is the yield on those maturities, it closed lower, indicating that we'll likely continue to see a downward trend in the fixed income market. However, again, when you look at the expectation of the Eurobond issuance towards the end of the year, this means that we're not going to see much of reliance on the domestic borrowing. This will also mean that there will be a lot of buying interest in the fixed income market, and we'll likely see yields sustaining a downward trajectory for the remaining part of the year.
All right, so this week, so far, the equities market, we've seen, mixed results. The domestic bourse advanced just by 6 basis points. What's your assessment of the market so far?
Yeah, so basically, market has been on a positive note since the beginning of this quarter, and this has largely been driven by the earnings season. We have seen a lot of strong numbers from big names, and the likes of MTN, Dangote Cement. They have released very strong performance, and this has led to a lot of buying interest in those tickers. We have also seen some of the other major names that have released their results. A lot of positive results, a lot of dividend declaration. This has led to a lot of investors taking positions in the equities market. And looking at the rest of the year, this will likely continue on the back of the expectation that we are still going to see more positive earnings release for the equities market, especially from big names in the banking sector. So if that should come in and the results are very positive, we should see this positive momentum continuing. And also, when you consider the fact that the expectation is that the fixed income yield will continue to decline from the current level. So as we see more a decline in fixed income yields, the equities market will be very much attractive for investors. So we are likely going to be seeing, sustained buying momentum. Although we'll see some level of profit taking at some point, but overall, looking at the outlook from now to the end of the year, it is still very positive for the equities market.
All right, well, that's in spite of yesterday's negative, but considering the current performance of the Nigerian financial market, where are the opportunities for investors? You talked about the decline in yields in the fixed income and then, well, the positive sentiment in the domestic, but where should investors look to?
Yeah, so basically, like I mentioned, for the fixed income market, the bonds market, we are still expecting a lot of bullish sentiment to dominate that space due to the fact that we're expecting Eurobond issuance. So once we see a Eurobond issuance, it means that reliance on domestic borrowings will be smaller, and we'll see a lot of investors trying to take position now, to lock in on those returns, before it declines further. So the physical market is a very attractive market at the moment for investors who are looking at holding for, short to medium term. Also, when you come to the equities market, like I mentioned, what we have been seeing in the financial market has been a reversal in what we saw earlier this year. At the beginning of the year, we saw yields increasing and a lot of investors in the equities market selling up their position in the fixed income market. And now what we are observing is the reversal. Yields are trending lower and equities market is looking very attractive. A lot of strong dividend declaration for companies half-year earnings release. This is expected to continue to drive the positive sentiment for equities market. So investors can look at those fundamentally sound stocks that are, declaring dividend at this moment and also that have, strong upside potential. This will help them to maximize their potential return. Also, beyond the Nigerian market, investors can also look at the Eurobond market. Yields are still very attractive at this level. And also, there's a need to look out for Nigeria's Eurobond issuance, which should take place within the remaining part of the year. Investors can also take advantage of that yield level, to optimize their portfolio return for the remaining part of the year.
All right. Thank you so much for the tips, investment tips that you just gave us there. Akintoye Oyelakun is investment analyst with Codros Asset Management, and enjoy the rest of your day.
Thank you for having me.
So talking about the markets, we'll see more or hear more details from there with Anita, but that'll be after this break. Do stay with us. Welcome back. Well, let's head straight to the markets now with Anita Edit.
Good morning, Ini.
Good morning, Anita.
Yeah, I heard your guest was talking about the fixed income market, and I think that's where I'll pick up from, especially because yesterday there was a bond auction by the federal government through the Debt Management Office. So, of course, that's had some effect on the fixed income market. But let's take a look at some of the markets there. For the federal government bond, the 27th of March 2050 was the only traded stock, was the only traded instrument there, which had about 8 deals with a total of 4 billion naira on it. And then at the Treasury bills markets, also not too much of activity, only the 28th of July 2022. 2 deals worth about 1.50 billion naira. For the open market operations, no activity there, was nil, was quiet. And then, of course, for the central bank's special bills, the 30th of August, which has been the only paper there, had 6 deals, which had much of an improvement compared to the last sessions. So now, we need to take an X-ray into what happened at the federal government's, the DMO bond auction yesterday, where it's conducted about a total, where it offered about 150 billion naira worth of debt instruments on 3 instruments. So to talk to us more about it, let's join Ijoma Onwukwe, a fixed income dealer at FSDH Merchants. Thank you for joining us, Ijoma.
Good morning, and thank you for having me.
Okay, so now give us some information about yesterday's the bond market auction by the federal government, which is coming some 2 days or a day after the inflation figures were released by the National Bureau of Statistics.
Okay. The DMO offered a total of 150 billion across the 3 segments, and we saw a total subscription volume of 360 billion. The DMO allocated about 72% of that volume, and we saw a steep drop in rate. Actually, that was expected. For the 2028, closed at 11.6 from 12.35. 2036 closed at 12.75 from 13.5 at the previous auction, and 2050 closed at 12.8 from 13.5 at the last auction. Essentially, the auction actually went as expected. The FG's recent announcement of the Eurobond issuance, the consistent drop at the NCT auction, and also the absence of OMO auction. All of this has led to an increase in the appetite of local investors. So most people want to, quote and unquote, lock in this decent yield. So what happened yesterday was actually expected. The inflation rate actually is to 17.38 from 17.95. But really, it didn't really, we haven't seen so much effect of that on the market because everybody's just trying to lock in the decent rate right now. So the inflation really didn't change anything on the trading side.
Okay, so now what do you expect in today's and Thursday's trading? Do you expect to see investors' apathy or investors' interest for fixed income instruments? Okay. Okay. Okay, Joma, sorry, I can barely hear you. Okay. I can barely hear you, so I think I'll just have to let you go for now. Okay. So that was Joma Onwukwe, fixed income dealer at FSDH Merchant Bank. So now let's flip over to the equities markets. It was, of course, like a ping pong. Down today, up tomorrow, down today, up tomorrow. So as of yesterday, we were down by just a blip, 1 basis points down, and that was because of losses from 3 Tier 1 lenders, FBN Holdings, Access Bank, and GTCO, which triggered that downturn on the market. And of course, the transaction sectoral performance was, of course, slightly mixed there, and then volume of transactions. So, Ladi, that's it.
Yeah, Aniti, thank you so much for the details from the markets. Well, just before we head to the crypto market now, let's slide to the UK. The Competition and Markets Authority is warning government officials of risks to consumers from the rapidly growing COVID testing industry in April and May. The competing watchdog said that it provided advice and market analysis to officials from the Department of Health and Social Care and outlined potential market and consumer risks. This comes after the CMA was criticized by its former chairman this week. The revelation comes after a barrage of complaints from holidaymakers and travelers wanting to visit family abroad who've been hit by high PCR test costs. Many have also reported that they did not receive tests or test results on time. I think Ladi is ready now to tell us what's going on in the crypto space. Hello, Ladi.
Hello, Edie. Well, it's still red in the market. Bitcoin still having that pullback. We don't know when it's going to recover, but we have Ethereum also below the $3,000 mark. Market cap $1.90 trillion, down about 1.54%. Let's bring in Rugi Kavamahanga now to give us more information. Hello, Rugi.
Hey, how are you doing today?
I'm good. Great to have you. Well, we see Bitcoin having that pullback, and also NFTs have been trending this year. Tell me, how can African artists and musicians actually take advantage of this NFT marketplace?
Thanks. No, that's a great question. And before I get to that, just a real recap of what NFTs are. NFTs are different than Bitcoin because, one Bitcoin is the same as another Bitcoin. It's fungible, just like gold. Like one piece of gold, another piece of gold, they're all the same. But NFTs are great because they're unique items, and it's a cool thing now with digital technology. Africans can really join the market now. Before, a lot of ways Africans really couldn't have access to global markets to find buyers and such. So now there is when this started, most of the NFTs were built on Ethereum, projects like OpenSea and Rarible, which are great projects. They're having a lot of hype, but it's really expensive to produce NFTs because of the Ethereum gas prices. So now we have Ethereum brought NFTs on the Binance chain, and one of the great projects is the Afen blockchain project, which allows Africans to be able to have a place where they can sell their art, but also they can create it really cheaply and have a mass distribution. So I think it's exciting, and it's a project led by Africans. So that's a great way for African people to get involved in the NFT space.
All right, Rugi. Interesting. Thank you so much for that update, Rugi. I'll talk to you another time.
All right, thank you. You have a great day.
All right. So, Ini, we have an interesting weekly chart for Bitcoin. We have that MACD about to cross, and the last time this happened, Bitcoin went about 6x and took it to the all-time high at $65,000. So we're about to see that cross happen again. If that happens, we might be in for a run.
Yeah, maybe Bitcoin will now hit that 100,000 that we've been waiting for.
Possible.
For a very long time.
Yeah.
Anyway, well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwadu. Remember to join us at 1:30 p.m. when we'll have Business Incorporated and give you updates from the world of business.
Thank you for watching. I'm Ladi Williams. Bye for now.